Good day, passengers. We welcome you on board flight FRK 321 to Arendelle. Before we take off, we will present you with the basic procedures and safety tips to survive this flight.
Unrealized profits are essentially the element one company in a group makes when it sells inventory to another company in the same group. And then deferred tax is the future tax payment the company is expected to make when the inventory is sold to a third party.
Here are some safety guidelines to keep you safe on our flight FRK 321. Our first safety tip is to identify who is the seller and who is the buyer. When the parent is the buyer and the subsidiary is the seller, it is important to note that the profit will be disclosed as both profit attributable to the owners of the parent company, and then there will be a separate section for the NCI portion. When the parent is the seller and the subsidiary is the buyer, the full unrealized profit is included in the books of the parent. Our second safety tip is to determine the method of calculating the profit. There are two methods, both the cost method and then the gross profit method. You will determine which one to use through how they ask the question. So it will be asked as either profit of 25% on cost or with a gross profit percentage of 25%. This is used to calculate by doing what you want over what you have. So in this case, it'll be 25 over 125, whereas with gross profit, it is always over 100, so 25 over 100. Then our third step is to use the unrealized profit table. You will use the amount that you calculated over here, and then you will times it by the applicable tax rate, and then you'll get the net effect.
When turbulence is experienced in a case of an emergency, such as a test or exam, remember the following. Check the tax rate used and keep calm. Take a breath and refer to the safety sheet.
Gentlemen, please fasten your seatbelts as we take you through an example of a scenario that you might encounter on flight. Frozen Limited holds 80% of the shares in Olaf Limited. This means that Frozen Limited controls Olaf Limited. Olaf Limited purchases all its inventory from Frozen Limited. Frozen Limited sells the inventories to Olaf Limited at a cost plus 30%. The corporate tax rate is 28%. They also give us some other information. I now hand you over to our other crew member who will take you through all the steps required to solve this problem.
The first thing we need to determine is the unrealized profit of Olaf Limited's opening and closing inventory. Also note that the inventory was sold at a cost plus 30%. Remember in our safety sheet we said that we need to determine who is selling to who. Frozen, the parent, is selling inventory to Olaf, the subsidiary. Thus, the parent is making the profit. This will be recorded in a consolidation financial statements. The other thing we said in our safety sheet was how to calculate unrealized profit on cost. We will use Olaf's opening inventory to calculate the unrealized profit on the opening inventory. The opening balance times 30 over 130 gives us the unrealized profit. We will calculate the tax on the unrealized profit. We will do the same with the closing balance. And also the tax on the unrealized profit. We will then go to our SFP financial statement. So we will work with inventory in deferred tax. The inventory we will include the opening balance of the parent, in this case Frozen Limited, plus the closing balance. We will minus the unrealized profit of the closing balance because it is not realized because we did not sell it to a third party. The deferred tax follows the expense line item. Thus, the deferred tax of the closing balance we will include as a deferred tax asset as it is debited.
Ladies and gentlemen, welcome to Arundel Airport. The tax rate is 28% and all unrealized profits should be eliminated at acquisition. We hope that you had a pleasant flight and a great learning experience. On behalf of Frozen Airlines and the entire crew, I'd like to thank you for joining us on this trip, and we are looking forward to seeing you on board again in the near future. Have a great day.